Hello, everyone. Sunny greetings from Nairobi, Kenya. My name is Stella Gatakaa. I work for Standard Chartered in the transaction banking unit, where I'm responsible for our trade product offering in Kenya. I'm honored today to be joined by two of our valuable clients to present a case study on our distributor finance proposition. I'd like to request our clients to introduce themselves, their organizations, and what it is that they do for their organizations. So ladies first. Thank you, Catherine, for joining us today. Please introduce yourself.
Thank you very much. My name's Catherine Muchai, working with a distributor for British American Tobacco Kenya as a general manager for the business. Thank you.
Okay. Catherine, maybe just a little more in terms of what's the name of the organization and what it is that you do for the organization.
Thank you. The organization is Outlook Limited, and we work with BAT on their supply chain, on their route to market objective of the business. Yeah.
Fantastic. Thank you so much, Catherine, for a lovely introduction. And now over to you, Louis. Could you kindly introduce yourself?
Hello, everyone. My name is Louis Kamau. I'm the National Sales Manager for British American Tobacco Kenya. I'm in charge of trade marketing and distribution for the Kenyan market.
Fantastic. Thank you so much, Louis. So maybe just to start us off, I will highlight what our distributor finance proposition is. Standard Chartered has been serving clients through economic cycles since 1853. All of us on the call today were yet to be born. And needless to say, we are currently in one of the most challenging global economic cycles, and we continue to serve our clients, truly here for good. There is a global shift towards sustainable and scalable supply chains. Our supply chain finance solutions seek to address our clients' entire ecosystem needs for this very reason. Under our banking the ecosystem pillar, we seek to solve for the needs of our clients' entire value chain, from sourcing to sales. On the sales side, we support our clients' distribution networks through customizable, flexible distributor finance programs that recognize that every single client has unique financing needs. This allows us to work with our clients and their distributors to structure a program that best meets their needs. In our discussion today, we will be highlighting our distributor finance proposition with clear benefits and impact on our client supply chain. By leveraging the strength of a distribution network, we avail financing for distributors for their purchases, resulting in improved capital efficiency, mitigation of distribution risks, improved financial performance, and ultimately, we help our clients to cement their relationship with their distributors. So what's the actual impact of this? Distributors such as Outlook can access assured financing at preferential rates and reduced collateral requirements. This is because credit evaluation is on the basis of the strength of the distribution relationship. In this case, the relationship between Outlook and BAT, who've had a relationship for very many years, and no one understands Outlook better than BAT does. So by leveraging that relationship, we are better able to provide more favorable terms compared to traditional bilateral engagements. Distributors also enjoy extended credit terms, enhanced liquidity, expanded stock holding, and I think both Louis and Catherine are going to speak to support during the peak requirements. By financing the distribution channel, we facilitate sales for BAT. I think the discussion about how BAT sales have grown even through this particular pandemic we find ourselves in is actually very interesting, because there are very few businesses that can speak to their business growing as this pandemic trudges on. We are also able to support BAT to unlock the cash from the receivables and de-risk their balance sheet. This is something that a lot of corporate treasurers are very passionate about, and it is at the center of the value that we provide for our clients. Ultimately, this strengthens the relationship with distributors and increases channel loyalty that is critical for both the sustainability and scalability of the supply. In banking, we often hear trust, but verify. So you can trust the authenticity of the information that I have given you. But I think let us listen to our clients for them to verify this information. So I think I'll start off with you, Louis. What would you say was the need that you're trying to solve, and how did we help to support this?
Thank you, Stella. I think for us, what we've seen with the category, because of the aggressive excise increases, if I compare a period of 2015 to 2020, we have seen an increase in terms of the cost of investment moving up by about 245%. So this has created a lot of pressure in terms of distributor capitalization. So when we had the conversation in terms of bridging this, Standard Chartered was willing to basically try something new with our distributors. So we've basically, as you have highlighted, we've seen a lot of benefits coming through with the program. So number one, as you said, we are able to basically address any needs in terms of capitalization, which has a direct impact in terms of the whole route to market agenda. So the distributors are able to stock sufficiently. We are able to basically introduce new variants, new categories within the market. And we're also able to respond to the needs of the market across the value chain. So in terms of them even being able to give more credit and still maintain their financial health. So it has been, I think, one of the biggest achievements we've had. And we are very basically delighted with the program. So, but I'm talking on my side, but I would ask Catherine to reinforce that. So Catherine, over to you.
Absolutely. Okay, yes, we without a doubt, the product came in very handy for us, considering the impact of capitalization based on the excise that we've been experiencing year on year. And as a result, we've been able to see a growth in our profitability. We've been able to purchase more and also support our clients downstream who've also been impacted by the same capitalization issue. Mm-hmm. So yeah, it's been a very key product for us as a business.
As I was doing the brief, Catherine, I did mention that as Standard Chartered, we're able to provide customizable and flexible distributor finance programs, and therefore we work with the client, you as a distributor, to structure a program that best meets your needs. Maybe you could speak to us about what this journey was like for you in joining the program.
Well, Stella, I think when we joined the program, it was a fairly new product in the market. We didn't quite understand where we were headed, but with the challenges we highlighted earlier in terms of the excise, the growth in excise on our category year on year, once we sat down with your team and they took us through what they were looking at in terms of this product, and the fact that it would actually come in and reduce the collateral requirements for us as a business to be able to access financing, we accepted the offer and were able to walk the journey with you. It wasn't easy, I must say, But over the year, we've actually managed to grow our business, and it's actually come in handy, especially in terms of even seasonal stocking, where probably you have a price, an excise increment that is anticipated, and then we be able to talk with the BAT supply chain and your team, and you're able to come in very handy and support the business in terms of financing with very flexible terms, because we take flexible terms in terms of what is our business requirement. Do we need a 30-day invoice financing facility, 14 days, 7 days? That is the beauty of the product, because you're able to tweak it to the business need at any particular time.
You're fantastic. Hello, Louis. I had mentioned earlier that as Standard Chartered, we are able to work together with the client and the distributor to basically structure a program that is flexible and customizable to meet your specific requirement. So maybe you could walk us the journey in setting up this program for you.
Okay, thank you. I think we began our journey back in 2018 when we met the team who took us through the proposal. I think what was striking for us, number one, was that the level of flexibility in terms of no collateral was sort of required. It was going to be based on the relationship we had and the trading history. So there was a bit of flexibility, and then the program basically spoke to the needs that we had at that point, which was, I said earlier, we had increasing excise, which meant the level of capitalization grew rapidly over the last 5 years. So when we had the discussion, we decided to basically start it off with one distributor and see how best it works. So obviously, in no time, the distributor did pick up the program. We were able to enjoy the flexibility. The good thing is that the team which was supporting us, I must say, had a lot of speed. They understood our needs. They were able to respond very, very quickly. And with that, I think we closed 2018 in a better position than we had anticipated, and then rolled it out to the balance of the other distributors. So as we stand today, the distributors accounting for 90% of our volumes are actually on the program, and they've actually given it sort of an A+ scoring in terms of meeting their needs. But most important, I must say that the bank has been extremely supportive. The level of client service is fantastic. The speed of response has been good. The level of flexibility, even on amounts, has also been good. So the bank has actually understood the needs within a very dynamic and evolving market. So it's quite a good program, and the progress we've made so far is absolutely nothing to complain about.
Thank you so much, Louis. I don't think I could have possibly put it better. That is the whole point of trust but verify. Yeah, so I think I would also ask, I don't know whether you can speak to what the impact of the program has been on your cash flows and your overall performance.
Okay, so I would say within, because we've got target accounts receivable. So from when we started the program, we've actually been able to close month on month for the last 2 years within our target accounts receivable. It's able to help basically our cash flow positions basically during peak periods, so when we have to respond to additional demands. So that has been good. I think from a route to market perspective, we've basically seen that all our distributors are sufficiently stocked in terms of the whole portfolio, which basically translates through the value chain. So if we look at our indices like retail audit. If I compare from 2018 to 2020, we've seen a reduction in incidences of out of stock in the market, which on overall contributes to the growth and sustainability of our category. I think one more important thing is that during the COVID phase, which was a bit difficult, yes, we did get a bit of a decline, but if I compare it with the other categories, we were actually slightly better, and we've been able to see a bounce back with that. We obviously had to change a little bit in terms of our focus to realign to the market requirements, and also drive a little bit more credit to trade due to the environment and the needs that is coming out of it. So the program was actually pivotal in terms of strengthening this plan, and we've basically been able to carry out stronger and more resilient during the COVID period.
Fantastic. Thank you so much, Louis. Catherine, if I may ask, how do you see this program supporting your growth? And I would speak to this both pre-COVID and during the COVID season.
Well, I would say since inception of the program, we've seen a better management of our cash flows. We've also experienced growth year on year, especially during this COVID period. We were assured of certainty in funding, which
Yes.
we were able to extend to our clients downstream. And we were able to capture the unique opportunities in the market for growth. And in this instance, I would say the bank came in as a friend indeed. And I'm sure Louis was also a very happy man because he was able to collect his money as and when he needed to. And also in terms of trade and enhancing our relationships in trade, our clients are also happy because we were able to also extend a bit of credit to them and a bit of credit days based on the fact that, yes, Louis has been paid, and then we can be able to flex a bit and be able to also support them, support our business in this crisis. So it came in very, very handy.
Thank you, Catherine. So as we say, distributor finance really leverages on relationships. So I'd like to ask Louis, how would you say that the relationship with the distributors has evolved following this program being put in place?
Well, I must say it's to the positive, because right now we basically do not have to talk about stocking levels, so the distributors are sufficiently stocked up, so we can focus on the core objective, which is basically to drive our business growth agenda and ensure that we're able to supply our consumers on their brands when they need them. So it refocuses the conversations from what the distributor should have to basically what the distributor should drive. So from a relationship perspective, I think it's grown positively well.
Fantastic. Thank you, Louis. I think I'll just have one last question, and this would go to Catherine, basically asking, what value have you seen as a result of this program, and what support have you received?
Well, like I said earlier, we have had certainty in financing and competitive working capital, hence allowing us to concentrate on our main business, which is distribution. We don't have to have endless meetings with Louis on how and when you're going to pay him, because that is guaranteed. And it gives you the time now to focus on what your business objectives. We've also been able to have improved working capital management cycles in terms of accounts payables, inventories, and accounts receivables. In terms of support, we have had, the head of supply chain has been instrumental in supporting the program and ensuring that the bank advances seasonal financing support and ensuring that our supplier assists us by always having conversations on a monthly basis based on the requirements for the business. Like I said, the beauty of this product is flexibility, because then we're able to look at, do you need a 30 days, a 7 days, a 14 days, such. And unlike initially when you could have cholesterol and then you have facilities that you're not really utilizing to the maximum, I think it gives you an optimal utilization of your working capital.
Fantastic. Thank you so much, Catherine. Thank you, Louis, for your very candid, your very candid discussion. I think I will now just ask if, Catherine, you have any closing remarks?
Well, for me, I would say this is the perfect product. And I would say it also came in at the right time. And maybe we would be looking at now extending it to our clients downstream. That would be a fantastic idea.
Fantastic.
Yeah.
Thank you so much, Catherine. Louis, would you have any closing remarks?
Yes, I think first is to thank the Standard Chartered team for basically agreeing to partner with us and our distributors. I think it's been a fantastic journey, and we've basically seen us turning opportunities into success. As Catherine has pointed out, we still have a lot of opportunities that we can harness downstream on the value chain, which I know already is work in progress. So I'm also looking forward when we can get to the next step. But most important is the level of client service, professionalism that we've seen with the bank. We basically have very direct communication, very high levels of accessibility with the teams. So we're able to discuss any needs and any issues on time. And the most important thing is that the bank has been very flexible in terms of the responses. So I would not hesitate to vouch to any other client who is willing to come on board on the program.
Fantastic. Thank you so much, Louis. I think that brings us to the end of the interview. Mine is to say thank you so much, Louis. Thank you so much, Catherine. It's been a very candid and insightful discussion. And I'd also like to thank GTR for availing this platform for us to leverage for growth. And we look forward to seeing you during the GTR conference on 1st and 2nd of October. As a key partner for GTR, we are really excited and look forward to the outcomes of the conference.